Hey guys, what's up? This is Andrew for TRENDLINES.com. So in this video, I would like to make the end of week update for AMC and GameStop. So we're gonna see everything that happened this week. We're gonna try to see what impact it can have for next week. Where are our supports and resistances? So let's get into it. All right, let's start with AMC. So guys, I did a video not long ago, but let me remind you here what I was saying. What is the situation here? So on the long term, of course, we are bullish. The main reason, if you don't know if you are bullish or not, just check the 200-day moving average. It's a very good indicator. If you're above, you are bullish. If you are below, you are bearish. Okay, that's for long-term view. Here we are above, we are bullish. Everything is going well to me. What I want to focus on today is in this corrective pattern that we are having here. We have this kind of breakout, fake out, I don't know. So I don't really like what I'm seeing here. So let's try to see first if this trend line is correct, because, you know, sometimes trend lines, you don't need to move it a lot to create a breakout. So here, what I'm trying to see is there any trend line close to this one that is not creating this breakout? And I'm going to force it. I'm going to try to, I'm putting it here and I'm trying to connect the lows I'm having here. So I'm cheating a little bit just to see how it looks, and it's acceptable. Okay. The issue I have is that I don't match the slow, and here it's not perfect, and here either. So definitely this trend line is not as good as this one. That is to me the right one, but is still acceptable. So if we have a strong bounce, this would be the trend line that I would use. So it's still interesting to see that there is a situation where we don't have a breakout. But for now, we do have this breakout. Then if we zoom in a little bit, I'm gonna then tell you what it means for next week. But first, if we zoom a little bit on the hourly time frame, so I'm gonna put back the trend line. It moved a little bit. Okay, so it's like this, right? Now I'm matching here, 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 and here. I'm not matching perfectly here, but I'm matching here, here, and here. So it's the good trend line to watch on the hourly time frame. And here we can see, guys, that we have this breakout first, then here rejected. And yesterday, we went to 36.5, which is right now the level. This is going higher, that we need to trade above to be back in the triangle, ascending triangle we drew here. And we got rejected. So, I mean, it's not looking great, right? But I have some good news, guys. I have some good news. As I was saying on my Discord, we have here an interesting candle formation. Look, let me get rid of that. Well, moving basically lower every day since the 19th of October. Bam, 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 bam. And here in the past 2 days, look what we're having. Those are doji candles. So the first one is not really perfect. The body is still big. We have a small tail on the downside and a bigger tail on the upside, but it's not a very nice doji candle. Either to be a perfect doji candle, it needs to be very small, or on the other side, very long. And here we have a long-legged doji. So what does it mean? It means that bulls and bears were fighting all day long, making new lows, making new highs. And in the end, at the end of the day, it came back to where it all started, still in green, which means bulls won this day. It's a small victory, but it's still a victory. The day before was a victory too. So we have 2 days in a row. We have those kind of doji candles won by the bulls. Guys, we should be in an area controlled by bears if this is really a breakout. So this breakout is not looking good. I mean, it's not looking like a strong breakout for these reasons. First, no volume. Okay, so whenever you have a breakout, you absolutely need to check the volume. I mean, it would get rid maybe of 80% of your breakouts. You would be left with 20% of them, but those 20% would be working very well. Here, it's not a good breakout because, as you guys can see, what I mean by volume, you need to have at least twice or 3 times the volume traded in the past week in average. Okay, the average daily volume. Here you can see on this day where we broke out, the volume is even lower. So first reason to have a fake out. Second reason, 2 doji candle that closed in green. And I can find a trend line that is not perfect, but that is fitting with this lows. So my take is that bulls are taking back control. And once again, to take fully back control, we need to get back in this ascending triangle territory around 36, 37. Now it's going higher every day, but it's looking quite good to me. The alternative scenario you guys need to be aware of is that bears take back control. We make a red day, and you know, we have support here at 33.5. So maybe we're going to rebound here, but then this breakout would be, I mean, of course, validated, and the worst thing that could happen to me. But still, guys, it's important that to be prepared for every scenario so that you don't panic, you're not scared. I mean, if it's part of the plan, it's fine. And here, you need to be aware that if we close below 33.5, we might go to 30, okay? And then we'll probably bounce, you know? So just be prepared for this scenario. It's not my preferred scenario, but it's something that can happen. So we need to be prepared. My preferred scenario is that we come back here, guys, all right? So let's see what is happening. Now let's go to GME. All right, so GME is showing much better signs. I like GME. It's really, you know, a good example of how it looks when bulls are fighting bears and bulls are controlling what is happening. I mean, okay, let me explain. So first, we are in the same kind of environment in the ascending triangle, but here GME is already on the 200-day moving average, which is a strong support, which is supporting the price for the past week. All right, you can see we never closed below that. We played with it, okay, on that day, but we closed above. And since then we are grinding higher. And look, guys, what I'm really paying attention to is this trend line. All right, this trend line is very important because, as you can see, 1, 2, 3, 4, 5, 6, 7, 8 reactions on the daily. But if I go on the hourly time frame, okay, so I need to move a little bit because I have here extended trading hours. Okay, look at that, guys. It's almost broken actually. And look, in the past week, how many times we tested it? Once, twice, 3, 4, 5, 6, 7, 8. I cannot even count, guys. We are totally on it, all right? Especially yesterday. This is actually almost confirmed on the hourly time frame. I'm just looking at it right now. And what I like is to see this consolidation. This is something you guys can remember. This is something that is working well. Whenever you see the price action consolidating, so you can spot that using Bollinger Bands, for example. Let me just show you. So Bollinger Bands, all right. And you can see that on the daily time frame, it's narrowing. So we like to see that. Let's then zoom on the 4 hours time frame. Not obvious on the 4 hours time frame, and on the hourly time frame. Okay, more obvious on the hourly time frame. So you can see here we are really narrowing. Here we were just like here. Okay, you can see here it was very narrow, and then we had the move, and now we are narrowing again. So I think that, you know, this is usually what you're having in those build-up areas where buyers actually accumulate some long positions. Let me get rid of it. And this is exactly what is happening. So let me come back to what I was saying. Whenever you have a consolidation just below a level, a resistance level that has been tested many times, especially in the recent past, it's bullish, especially if you have increasing volumes. And look at what we're having here. So on the 4 hours time frame, clearly the volumes are increasing, all right? So this is good, okay? We have increasing volumes. We're getting close to the breakout. It's good. And on the daily, okay, volumes are stable. So what is happening here? So 2 scenarios. First, my preferred scenarios, we built up enough energy to just break out. Maybe we're going to have a retest, and then we're going to run to this area 230, where here we might be rejected first and play this little game again. Let's see, okay? But the alternative scenario, once again, is that, you know, we do one more small light thing, and then we break out. So this is possible as well. We are on the resistance level right now. So bears might try to do something. I'm looking at AMC chart as well. Bears might try to do something as well. So my preferred scenario is that we go higher right away, but my alternative scenario is that we make one more small dip and then we break it, okay? And the alternative scenario, once again, let's just be prepared if we break the 200-day moving average. To be honest, I don't want to be prepared for this scenario because it's not a nice one. But if we do break that, what could happen? What could happen, guys? Nothing too bad. I mean, it wouldn't be nice. It would take for sure more time. First, we could fake out 165 is the first support. If we break 165, we'd probably go to the 140 area and then bounce. So this is my take. Once again, I do believe we build up enough energy to break out now. If we do close above 185, let's call it like this, 184, anytime during the week, the day after, what I think is that bulls are going to jump in massively in the trade. So let's find out. That's it for today. I hope you guys enjoyed this video. And if you did, please don't forget to click on the sub, like, and bell button so you're going to be the first to know when I upload anything new. And stay close to shore. I'll see you guys.